Hey guys, I'm Andrew and today I want to talk to you about AMD and potentially running a LEAPS strategy or a poor man's cover call strategy on AMD. So before we jump in, I'm gonna plant 100 trees as soon as this very small channel reaches 1,000 subscribers. Help me out guys, and we're gonna help the planet out as well. And don't forget to hit the like button. So guys, let's jump right into Weeble and have a look at this. Cool, so the first thing I would like to acknowledge is obviously with the war in Ukraine, with the inflation fears, with everything that's been going on in the markets, with the Nasdaq being in bear territory now, obviously every single stock is gonna be headline driven for a while. That being said, AMD has been absolutely crushing earnings and it becomes a better and better deal as the days go by and as the stock here retraces. Now, if your portfolio is the type of portfolio that could potentially run the wheel on a stock like AMD, there's a bunch of potential there. That being said, not everybody has that sort of money in the portfolio, so we're gonna look at a LEAPS strategy here and see what the costs would be, see what you guys would have to do and what the returns would be on the same sort of strategy. So guys, I do want to have a brief look here at just an analysis on how the chart of AMD is looking. So as you guys can see, after hitting a peak of $164, AMD retraced back to the 300 moving average quite a few times, and as you guys can see on the daily at least, it has these pin bar type candles over here, the couple of green ones that go below the 300-day moving average before bouncing back above it. Now we can also pretty much see the fact that the blue line here represents a resistance line, and then it's really important for us to try and time the entry here. So first off, AMD at $100, it's a pretty fantastic deal. We're actually going to have a brief look at its intrinsic value in a hot second here, but before we do that, I do want to have you guys focused on what the perfect entry point might look like. So I'm gonna go ahead here and just pick a polyline for us to be able to play a bit. If you guys want to be a bit conservative, I would recommend that you don't go in as soon as AMD starts having the first or second green day. What I would actually do is wait for AMD to break above the blue line here, start making potentially a higher high, and when we're gonna check for a higher high, we're gonna hope for the price to be above the $110 mark here, so anywhere around here. Then I would love for it to retrace back to the same ish area until it starts moving forward again. So when it retraces back to this area, that's when I would opt to go ahead with this strategy and to just start investing for the long term. Please do your own due diligence guys, this is not financial advice, it's just my opinion, but I do want to take a second here with you to just do a Fibonacci replacement and to show you guys what this looks like. So between the top and the bottom, we can see that when AMD retraced back after the initial correction, it did so right up until the 50% fib level over here. Obviously after that it started going down again and found support at the 300-day moving average, and I think it's really interesting how the fib levels are going to potentially play into what we're gonna see here, because I can see a couple of scenarios where AMD might potentially go up until the 23.6% fib level and then recheck the same either 300-day moving average or the same resistance that we're now seeing over here until it starts moving higher again. Or I think that a second possible way of looking at the same thing would be for AMD to potentially go from here to all the way up to the 38.2 fib level until it goes back down again to the 23.6% fib level, and again this would be a perfect validation of a moment of entry, a confirmation basically. So guys, this is what we want to see before we go ahead and jump in, especially with everything that's going on lately. Obviously it takes such a little step from potentially from Russia towards de-escalating the war for us to start seeing more of a bullish market. I really think that between everything that's happening in the world, between the 25 basis points that the Fed is likely to increase rates by, the markets will potentially remain or become more bullish as long as things don't degenerate in Russia, but obviously that's a very big if and a very big question mark at the time. So with this said, guys, what does the actual LEAPS look like? And let's move over here into our favorite options profit calculator tool just to see what that looks like. So guys, I always encourage you, well, first off, let's have a look into Webull at what we would be potentially buying. And guys, I always encourage everybody to go out as long as your budget allows. So in this case, I'm gonna straight up look into January 2024. That's roughly 2 years away. A lot of times for the strategy here to work in our favor before theta starts eating up at the bot long option that we go for. And the second rule that I always go by is to make sure that I'm somewhere in the realm of a 60% delta or a 0.6 delta. So as you guys can see, a 0.6 delta would roughly be, or actually would be the $100 one over here. So in this case, let's honestly, obviously the higher the delta, the better you're gonna be off. It's just an opportunity cost type of thing where it doesn't make sense anymore after a certain point because it becomes too expensive. But I think that we can potentially look at the $80 strike price over here, which would be a 0.79 delta, a phenomenal entry price. So let's look at what this would look like when we're building it out. So we're gonna again come in here, go to January 2024, and we set the $80 strike price. So we're gonna go for this for the bot long option. So guys, with this in mind, I want to ask you, what is gonna be the point at which we would want to sell a covered call for the second part of our poor man's covered call strategy here? And to answer that, it's gonna be the $80 strike price that we chose plus whatever we're already paying for the option here. So it's gonna be roughly $120. And I know that at first we will not be making just enormous amounts of money from doing this, but guys, you do not want to be under that, because if you're at say $110, and let's pretend for a second that Putin gets shot in the head and then everybody sees the end of the war in 1 week, potentially markets are gonna rally. You cannot control that. You have no foresight into what the market is gonna do. So if that happens, you're gonna be caught on the left foot here, and what would potentially be a fantastic moment for you because you've bought the long option here becomes into a really hard to manage moment because you sold the covered call too fast. So if you get called away, you're actually gonna get called away at quite a significant loss. So with that in mind, we're gonna go for the 120 strike price here, guys, which means that we're gonna potentially make $2.19. Again, this is in 100 iterations, so it's gonna be $219 that we make back immediately. And I really want to check. So we went for the 14th of April expiration. Why did I choose this expiration first and foremost? Maybe some of you guys are really new to this. So why did I go for the 14th of April? In reality, you guys can go for any of them. What you need to understand is the fact that it's really important for you to do so at such a length in time that makes sense for you personally and makes you feel good, because you're sort of given a chance to control that strike price for the short call and just be able to move it higher or lower based on how the price moves. But it also needs to be far enough out so that theta actually does the most of the work for you. So as we know, 30 to 45 days is when the theta really starts to ramp up. So anything under 30 days, or exactly on that cusp of 30 plus before 45, is the perfect moment to sell something like this. I'm personally not a huge fan of weekly or bi-weekly type covered call selling, because first off, I'm trading in an account that has fees. So the $1-2 that I pay every single time I open or close one of these adds up and starts being annoying. So I'm gonna go out to the 14th of April. If I'm not mistaken, there's roughly 30 days up until the 14th of April. So let's see what the strike price here amounts to in terms of delta. We never want to be higher than 0.3 delta when we're selling this, and it's actually a 0.23 delta, which also translates to the fact that we are 77% likely for this to end up the way we're forecasting it. So we're 77% likely for it to expire worth. Cool, guys. Let's go back and have a brief look at what this looks like. Okay, so what we know so far, we know that we've gone ahead and bought a $4,000 option, actually $4,100 option, and we got back $219. Now guys, what you need to think about is the following item. We have $4,000 here to potentially amortized by the time that the long call expires. So that will give us roughly 24 months in which we have to amortize as much of the $4,000 as we possibly can. So we have just made $200 here in the 1 month. So let's say that we're gonna be able to bring another $200 for the other 23 months left, and let's see where we're at. That would actually allow us to recoup $4,600, guys. So in total, we're recouping $4,600. We spent $4,000, so that means that we've already made a profit of potentially $600. So that means that the $600 are in our pocket. Let's take a more conservative approach here. Let's say that we're only gonna be able in 75% of the 23 months that we have available to us to sell the $200 premium. For who knows what reason, we won't be able to do so for the others. So we're gonna actually make back $3,450. So it means that we end up with $560 at the end of the 24 months that we're still due to recuperate, okay? So guys, with that in mind, I want to first off calculate what this looks like. So first off, obviously we're buying the long call and we're selling the short call, and it's pretty clear. What we need to happen is for the stock not to move too aggressively. If it does move, we can see the fact that by expiration we could potentially make $972 just by being able to be in this trade, and obviously we would exit before expiration. We would not want to be called on either of those, but if we exit before the expiration, we might make $1,000. Now that's gonna be all profit. So basically, if you make $1,000 on your $4,000 investment, that will mean 25% that you could potentially make in 1 month. 45% on your investment is pretty fantastic if you ask me. But with that in mind, I really don't want us to start doing this with the idea in mind that we are potentially gonna make 25% in 1 month, because it might be unrealistic. So let's play the other scenario that we spoke about, guys. The fact that we are gonna potentially remain with a cost for this long call of just $560 by when it's due to expire. And let's say that by that time, AMD, obviously 2 years have gone by. Hopefully we've all forgotten about COVID. We've all forgotten about how Putin died, and everybody's really happy. There's no more FUD fear, nothing, okay? And let's say AMD by that time is gonna be anywhere between $150 and $200. With the way AMD has been trading recently and with all the developments that we've been seeing with AMD, that's more than likely, guys. So with AMD potentially being between $150 and $200 here, and we know that we have $560 more to make up for this long call. Let's see how this looks. Actually, I think a lot of you guys are gonna be absolutely shocked by how much money you can make, because as you guys can see, there's like, if AMD is gonna be at $150, we could potentially make $6,500 on top of all of the investment that we've made by just doing things slow and steady, selling those covered calls in a very conservative way, doing this on a stock that's just fundamentally great, and we're gonna have a look at that in a second here. We can obviously, if it's at $150, we're gonna be at $64.40. If it goes all the way to $200 by the expiration date here, which again is gonna be January 2024, so let's hope we're all healthy by that time, it's gonna be roughly 11 grand on an initial investment of $4,500 or $4,000. I forget how much that was, but it's basically gonna more than 2x your money here. It's gonna 3 point something x your money, almost 4x your money. So guys, with that in mind, let's have a look here at why exactly did we choose AMD. And I want to take you to a site here that I sometimes use called Guru Focus. So the few things that I always make sure to check before going into a trade, even if I know the company really well, in all honesty, I pretty much always do a deep dive in just seeking alpha on all of the financials, try to understand what the company is doing, and if the stock is referencing the company, trading at too rich of a multiple, too low of a multiple. I do have available for my Patreons for just $5 a month, guys, a whole deck that goes into an intrinsic value calculation for every single stock you might want, so we can see exactly what valuation every single stock has. If you're interested in getting access to that, just check the description below and feel free to message me. I can tell you what AMD is worth right now. Comment it in the comment section below and I'm more than happy to answer that. But as we can see, guys, just as a very brief look here, revenues have been growing steadily throughout the past few years. We can see net income, so they're profitable. Net income has also been growing steadily through the past couple of years here. And the beautiful thing about AMD is the fact that they basically don't have any debt. If they would want to just settle their debt right now, they would be able to do that. It's basically a sneeze based off of their cash in bank, so that would be so good for them to do if they choose to do so. Obviously, operating cash flow is a very important metric, and it's easy to see here the fact that they have loads of operating cash flow. So these are just the very brief ways of being able to, at a glance, understand if a business is healthy or not, guys. Now, Guru Focus does come with their own DCF model here as well. So let's have a look at what that looks like. It says that the fair value is $38. So this is actually pretty funny. Yeah, it's crap. I don't believe that. But anyway, if you guys want access to my DCF and just getting a sense of what the fair value to AMD would be, just comment it in the section below in the comment section and I'm gonna be more than happy to do so. Guys, that wraps it up for today. Let me know if you have any questions. Please feel free to join my Patreon. We have a fantastic community over there and I'm gonna catch you next time. Take care.